Beginner's Guide to Day Trading. Day trading is one of the most popular yet challenging forms of trading in the financial markets. It involves buying and selling financial instruments within a single trading day to capitalize on small price movements. While it offers the potential for significant profits, it also requires a well-thought-out strategy, discipline, and risk management. Many beginners are drawn to day trading due to its fast-paced nature and profit potential. However, without proper knowledge and a structured approach, they may face heavy losses. Before we get started, subscribe to our channel and turn on the notification bell so you never miss our latest content. Understanding the basics of day trading. Day trading involves buying and selling stocks, forex, commodities, or cryptocurrencies within a single trading session. Traders capitalize on small price fluctuations and rely on technical analysis, market trends, and news events. Unlike long-term investing, which focuses on company fundamentals, day trading is driven by short-term volatility. A key component of day trading is liquidity, as it ensures that traders can enter and exit positions quickly. Additionally, traders must be aware of bid-ask spreads, margin trading, and leverage to maximize returns. A clear understanding of financial markets and trading platforms is essential for beginners. Researching different asset classes, market structures, and order types can significantly enhance trading skills and decision-making. Choosing the right trading platform. A reliable trading platform is crucial for executing trades efficiently. Several brokers offer different platforms with varying features, including real-time market data, charting tools, and order execution speed. Beginners should look for platforms that provide a user-friendly interface, low fees, and essential features like technical indicators, watch lists, and news feeds. Security and customer support are also vital considerations when selecting a platform. Popular platforms include TD Ameritrade, Interactive Brokers, and MetaTrader. Developing a trading strategy. Having a well-defined strategy is essential for day traders to succeed in the volatile market. Strategies like scalping, momentum trading, and breakout trading are commonly used. A trading plan should include entry and exit rules, risk management techniques, and predefined profit targets. Beginners should backtest their strategies using historical data before implementing them in live markets. Sticking to a plan helps traders avoid emotional decision-making and enhances consistency. Risk management and capital allocation. Risk management is a crucial aspect of day trading, as the fast-paced nature of the market can lead to significant losses if not handled properly. Traders should allocate only a small percentage of their capital to each trade and use stop-loss orders to limit potential losses. Position sizing, risk-reward ratios, and diversification are key elements of a risk management plan. Without proper risk control, even a few bad trades can wipe out an entire trading account. Understanding market trends and technical analysis. Technical analysis plays a vital role in day trading. Traders rely on charts, patterns, and technical indicators to predict price movements. Moving averages, RSI, relative strength index, moving average convergence divergence, and Fibonacci retracement are some of the commonly used indicators. Understanding support and resistance levels, trend lines, and candlestick patterns can help traders make informed decisions. Market trends should also be analyzed in conjunction with fundamental news to maximize accuracy. Managing emotions and psychological discipline. Emotional control is one of the most challenging aspects of day trading. Fear and greed often lead traders to make impulsive decisions, such as overtrading or holding onto losing positions. Developing psychological discipline through meditation, journaling, and maintaining a structured routine can help traders stay focused. Setting realistic expectations and learning from mistakes without emotional attachment is essential for long-term success in day trading. Utilizing stop-loss and take-profit strategies. Stop-loss and take-profit orders are critical tools that help traders manage risk and secure profits. A stop-loss order automatically exits a trade at a predetermined price, preventing excessive losses. Take profit orders, lock in profits once a trade reaches a target price. Setting appropriate stop-loss and take-profit levels based on market volatility and strategy ensures that traders maintain a balanced risk-reward ratio. Proper execution of these orders can prevent emotional decision-making and improve trading consistency. Practicing the demo account. Beginners should start trading with a demo account before risking real money. Demo accounts allow traders to practice strategies, test the platform, and get accustomed to market movements without financial risk. Practicing in a simulated environment helps build confidence and hones decision-making skills. Once traders feel comfortable with their strategies, they can transition to live trading with small amounts of capital. Keeping up with market news and economic events. Day traders must stay informed about economic events, earnings reports, and geopolitical developments that impact market movements. News sources like Bloomberg and economic calendars provide valuable information that can influence trading decisions. Sudden market shifts due to unexpected events can present both opportunities and risks. Understanding how news affects different asset classes helps traders anticipate volatility and adjust their strategies accordingly. Continuous learning and improvement. Successful day traders continuously refine their skills, adapt to changing market conditions, and learn from past trades. Keeping a trading journal helps identify strengths and weaknesses, leading to improved performance over time. Reading books, attending webinars, and engaging in trading communities provide additional insights and strategies. The market is constantly evolving, and traders who stay updated and flexible have a better chance of sustaining profitability in the long run. Day trading can be a rewarding yet demanding endeavor for beginners. It requires a deep understanding of market mechanics, effective strategies, disciplined risk management, and emotional control. By following the principles outlined in this guide, aspiring day traders can develop a solid foundation and increase their chances of success. Continuous learning, practice, and adaptability are key to thriving in the fast-paced world of day trading. With the right approach, persistence, and a commitment to improvement, anyone can navigate the complexities of day trading and work towards achieving their financial goals. If you enjoyed this video, give it a thumbs up and subscribe for more content. Hit the notification bell to stay updated with our latest videos. Share your thoughts in the comments below. Thank you for watching.